Hello guys and girls and welcome back. It's Big John here. The app's at the bottom of the screen if you'd like to listen to my music, so is all the relevant information I'll be speaking about in this video. What we're going to be talking about today in this video is an updated version of the Lakers strategy. I will link the previous videos up here in the top, but what we're going to be doing today is we're going to be going over a new way of how to do it on TradingView and using set confluences to say I'm going to take this trade. I'm going to show you a period over a month to see which trades were good trades to take on the confluences and which trades were bad trades that you would not have taken. I hope you're going to like this one. Let's get into the video. Okay, so as you can see on my chart right now, I've got my Asian range indicator here that shows the Asian range here, the London range, which is this blue box, and the yellow range, which is New York. I've also got a moving average indicator on right now, which helps me to have the Lakers lines and the 200 moving average. So that's 355 SMAs and a 200 SMA here, all within one indicator, which helps. And I've got my TDI here at the bottom. I'll show all the settings for the indicators I have at the end of this video. Okay, so as you can see from the strategy straight away, I'll go straight over to the green vertical line and it'll show us what we've got here. So when we go into the London session right here, you can see you had a TDI cross. Price was underneath the 200 moving average, acting as a resistance, and you can see the Lakers lines was curving down. So I had confluences to tell me I could take this trade upon this TDI crossover bearish here, and I would have caught these pips going down to here. Now where I would have put my stop loss would have just been above here, just above these Lakers lines, and then I could have put my take profit 20 to 30 pips down. That's what I'm looking for here. It doesn't have to be a set place, 20 to 30 pips. So moving on swiftly, we can get to the next point here. So I would have taken this trade here right now, coming out of the Asian range, looking for the London breakout. As you can see, the TDI cross was here. Price was underneath the 200 moving average. The 200 moving average was acting as a resistance. And also you had the Lakers lines that was underneath, telling us it was a downtrend underneath the 200 moving average. I would have caught this trade going all the way down to here. And like I said, we only need 20 or 30 pips, but if you trail your stop, you can get more. My stop loss would have been 20 to 30 pips above here, and I would have taken that trade. Now here, I would not have taken this trade. Now, reason why I would not have taken this trade here, look, my Lakers lines are edging up. Price is breaking through the 200 moving average. I'm not too sure if it's being supported. So I would have said, you know what, this doesn't really look good to me. I'm not going to take this trade. So even though it did go all the way down here, I don't care. Doesn't matter, because there's always trades like what we need from our confluences on different pairs. So it's all cool. Let's go to the next one. Here again, I would not have taken this trade. Price was too far away from the 200 moving average. You can see it was down here. So price could have gone this way or it could have gone down, but I don't know. So even if I had a crossover here for a bearish trade, I wouldn't have taken it. I would have left it. There wasn't enough consistency in my confluences. Now I would have taken this trade here. Reason being, look, price is edging down with the Lakers lines going down. You can also see here the 200 moving average is above price. And then we can see a TDI cross here. I would have taken this trade going down here. Now this one here, you can see price is being supported by the 200 moving average. The Lakers lines are going up as well, as you can see, through the 200 moving average. TDI cross here, you even had a nice shark fin in the TDI. Would have took this trade all the way up here and got these pips. Now once again, stop loss, as I said, 20 to 30 pips this way. Take profits 20 to 30 pips from entry up this way here. Here, I would not have taken this trade. Lakers lines are coming down. Price, the 200 moving average is even edging up. Price is not underneath. Although it is above and acting as a support here, it's not underneath for a sell if I wanted to get that. If I wanted to get the buy, the Lakers lines here are edging down. So I'm not too sure if price is going to just bounce and continue to go up. As you can see, price started to go down eventually. Even though there was a good buy here, I don't care about all of that stuff. I only want my specifics. This is specific. Price is underneath the 200 moving average. So is the Lakers lines. TDI cross bearish here. I would have been able to take this trade going down here, as you can see. Now here's an interesting one. Now this here would have been a losing trade or a break even trade. Reason being, I had my entry here on the TDI I could have taken. Price never went too far up. I think it went about 17 pips, maybe 20 pips. So you did have a chance to get your 20 pips, but I'm being as fair as possible with this strategy. So let's say you didn't take it. You expected it to go further. It could have gone against you about 20 pips. But then you did have a get out of jail card here. Just before the end of the day right here, price went up about 3-4 pips in your profit. I would have closed out. This was a Friday as well. I don't keep my trades overnight or over the weekend most times. I don't need to. Friday as well over the weekend, I would have cut out that trade with a win or a loss. I still had my other trades that were winning. As long as you use good risk management, there shouldn't be a problem here. Now here I would have taken this trade. As you can see, the Lakers lines are edging down through the 200 moving average we can see the TDI cross was here and price was underneath the 200 moving average. So it's a stronger confluence for me to say I could take this sell. So as you can see here, I would not have taken this sell. Reason being is that even though price is close to the 200 moving average acting as a resistance here, I can see the Lakers lines are kind of going up, and I don't know if it's going to switch through to go over the 200 moving average, and this is what it did do to do this move. So I wouldn't have taken that. I would have left this trade moving forward. Now here I would have taken this trade. Look how price is respecting the Lakers lines right here, and it's above the 200 moving average. I would have taken this buy and got this up to here. This was more than 20 to 30 pips. Remember, my stop loss would have been down here, 20 to 30 pips. I'm all good. Now here, as you can see, the Lakers lines are coming down. Price is being respected by the 200 moving average, unlike the other trade. See the TDI crossover here. I would have got in just on my TDI crossover. That's our entry signal, but we just need to see the rest of the stuff on the chart are matching up to say, yes, when this crosses at this point, I can take this. And as we can see, Lakers lines coming down, price underneath the 200 moving average, acting as a resistance. And you can see a TDI cross there. We would have taken that trade. We would not have taken this trade. As you can see, price has gone above the 200 moving average and the Lakers lines all the way down here. So we don't have a strong confluence for our sell. Even though it did sell, we didn't know it was going to do that. So we just leave it like that. You did have a strong confluence here though. This is your strongest confluence if you wanted to risk this trade. This here, being that the TDI is really, really overbought and it's very, very close to the trigger red zone here that I've got marked up as my 80. You had a TDI cross here and you had a very good entry for that sell. But like I said, we're only going on our confluences. That's another whole strategy if you wanted to do something like that. As we can see, we go on here. Look, as I said, keep it simple. You can see the lines are coming down, the Lakers lines. Price is underneath the 200 moving average, acting as a resistance. And you can see a crossover happen right here. You would have got in and got these 20 to 30 pips here. Just to show people it is 20 to 30 pips half the time, because I know people might say, no, it's not. You can see right here, this is 34 pips. If you took it all the way down, that's about 50 pips. Remember, stop loss is 20 to 30 pips up this way here. And what I mean by 30 pips would be right here. Yeah. As we can see here, the Lakers lines is acting as a resistance to prices underneath the 200 moving average. We'll take this trade. Now you can see how I'm going along with this, how trades look like better setups when you're very specific with your confluences. Not if buts and maybes, be very specific. Would not have taken this trade. As you can see, the Lakers lines are edging up. You can also see that price is underneath the 200 moving average. So even though it was a bullish cross, I don't want that trade. Would not have taken this one. As you can see, once again, TDI is very close to the overbought zone, so that's why it's sold. But at the same time, we can see here, prices were above the 200 moving average. We're not looking for a bearish cross. We're looking for a bullish move. Yeah. Which would have been a New York trade here, but we're doing the London breakout. That could be for another video. As you can see here, I would not have taken this trade. Even though price was kind of edging down, it was above the 200 moving average, indicating it's a buy zone. And at the same time, this was an impulse candle down, being that there could be news or something like that. So I don't know if it will impulse back up. I don't want to be involved in all of that. I'll look for a better setup. As we can see here, this was the last day of the market. You can see price was, like I said, above the 200 moving average. Our EMAs were just coming through here. So price was above. They were just holding price up. We had a TDI crossover here, and then we could have got this trade, held this trade all the way to New York, and that was about 107 pips, and that was even with NFP. And if we didn't, remember, we only need 30 pips. This was almost 50 pips here. We would have long got out of our trade long time ago. Our stop loss would have been around about here, and there you go, but we would have got that trade there. So that about sums it up, guys and girls. If you like what you've seen here, please leave a like, share, comment, subscribe, and I'm going to be doing more videos like this, most likely another one with Pip Hunter, similar to this, but showing you how you can use Pip Hunter with this. If I do get enough demand on people asking for it, I'll do a New York version of this, and maybe gold, maybe other ones. It does work on many trading instruments like this, and I would follow this strategy going through the set of 19 pairs I have in a day. I have 19 pairs up there, and I'm looking for a solid confluence on any one of those pairs, and I'll take either multiple trades, so maybe 3-4 positions, or I'll just take 2 maybe, or 1. It just depends how I'm feeling and the risk management I can do between those pairs. If you would like to join my group and get any mentorship from me about how to use this or how to use anything I know, Pip Hunter, trading, anything like that, price action, please follow the Discord, get in there, give me a direct message. Also, we have signals as well, Starfish Prime, if you'd like to join that, there's a link in the description below. And that's about it. Peace.